Government shutdown ends. Washington has put another piece of duct tape onto a hull of a sinking ship. 50-year mortgages and tariff rebates. Till death do us part didn't work out with my wife, but it seems it will with my lender. Streeteries to face new rules in major U.S. cities. Apparently officials want your favorite taco stand to now meet NASA launch standards. All of that coming up today on Teed Off. Hey, welcome back, folks, to the weekly podcast Teed Off, where I get into all the news that is news, that should be news, at least according to me, with no filter, no fluff, and as always, no political affiliations. What you guys got to realize with this, too, these are my opinions. I'm not necessarily getting in and just getting all the facts on these situations, because usually I will get into some article and I will just realize that it's fluff, it's BS, I've heard it before, or sometimes just see the headline and say, hey, you know what? That's a puff piece to me. I'm going to try to make this a little faster tonight. This is one of my gym days. I started going to the gym last week. Feeling good. It's tight, man. It gets harder. It gets so much harder as I get older to get into that gym, and then the soreness just doesn't go away so fast. That first day after working out, actually the second day, man, I could barely get out of bed. And then my buddy wanted to go play golf because it was actually nice out. And man, I was so tight and stiff but that's all gone now. The first week was taken care of. Once you get through that first week, it becomes a lot easier. I'm going at night because that's whenever I get kind of bored at the house. And I've got a 24-hour gym thing. Nobody's there. I can get on the machines I want to get on. Let's start right off the bat. Government shutdown ends. Yep. Those guys did so good. They put a Band-Aid on a bullet hole. It was just another continuing resolution. They funded it until January 30th, I believe. What is it, 31st? You do the January. Yeah, it's got 31 days. January, February, March, April, May. You know the drill. So through the 31st. So I guess we'll be doing this again in February. This sort of thing should give us a little boost into the holiday season. We should all be happy and just let the Congress go and have their little vacations. But let's take a look and see what was actually inside this continuing resolution. What did they get away with? They didn't do anything with the premiums. They didn't get into any of that. Didn't make any promises. I think they said they might have a vote, which that won't go anywhere. And if you're not familiar with this, the Affordable Care Act, what they're doing is they have enhanced premiums that they give to people each year. Basically, whatever income you're making or whatever, minus the poverty level, is the premium subsidy that you get. Premiums, they're tax subsidies, which you can get them on your income, taken off your income tax, or you can pay them directly to the insurer at the beginning of enrollment. Looking into it, though, it's looking like the premiums will go up anywhere between 114 and 150 some percent, which is a lot. That's a lot. Plus, they're already saying that the insurance costs are going to go up drastically next year for all insurances all around. The premiums will be about 18% higher. As if these things aren't expensive enough. I'm a big fan that insurance is something that you give 100% of your money to, and then they give you 70% back. Most people would call that a scam. No, they wouldn't. Most people would call it insurance. I call it a scam. Let's see what was inside this continuing resolution. If it wasn't what they shut it down for in the first place, which was these premiums, then we really didn't do anything. We just agreed to shut down the government for the longest period in our history, and we didn't get anything really done. And now they just kicked the can down the road a little bit. But they did get a couple things in there that we want to know about. One of them is they went ahead and appropriated funding for agriculture. They did put in a thing saying that people will get back pay, that's what we do all the time. They get back pay even though they weren't working during all that stuff. Military construction. So you don't have to worry. If you're on a military base or the Army Corps of Engineers are building something for you or something, then that's all going to continue to go through at least September 30th, which is the end of the government's fiscal year. What else? The VA. The VA is taken care of. They said, well, that's going to be taken care of through the fiscal year. Oh, what is this one? What is this one that they hid in there for us? Yes, funding for the legislative branch throughout the fiscal year. So through September 30th, Congress doesn't have to worry about getting their paychecks. So if they decide that they're going to shut down the government again on February 1st, Guess what? Congress is still going to get paid. It's unbelievable to me. Unbelievable. But the shutdown is over for now. We'll try it again in 2026. See where it goes. All right, 50-year mortgages, $2,000 tariff rebates. The Federal Reserve deciding that their balance sheet is now going to stop running off, so they're not going to be tightening anymore. But they are really not tightening either. I'll explain in a minute. But the 50-year mortgages, okay. All right. Trump says that this is going to be something that will help housing affordability. No, it will help monthly affordability. It will actually make housing costs go up. Why? Because if I can extend my loan out to 50 years, so can everybody else. Say I had a $2,000 a month mortgage on a 30-year mortgage. You're only going to probably get it down at like 6.5%. To probably about $1,800 a month on a 50-year mortgage. But that's $200. That's about 200 and whatever. We'll call it 250. Maybe get it down to that. But everybody else is getting that same 250. So whenever they go to houses with real estate agents, you're just going to see the cost of the house go higher. You get what I'm saying? Because there's more buyers. So I don't see how this is going to solve any housing affordability issues. All it's really going to do too is kick you out paying an interest rate for another extra 20 years. Say you're saving that $200 a month and you invest that into, say, the markets, and they do historically whatever they've done, then yes, at the end of that 50 years, that $200 invested with all dividends and everything else reinvested in that time will be over $1 million. You'll have over $1 million, but that's only if you're robotic and you do it every single month. You take $200 every month that you would have been paying into a mortgage and you invest it into, say, a 7% annual return. Now, you also don't know where inflation is going to be in 50 years. So that return, you still might be losing money, but you will make more money on the house, all things being considered, all things running perfect, all things doing that. But you would have to be absolutely robotic about reinvesting that $200 savings each month. And I just don't see that happening. People don't do that. Life happens. People move. People get divorces. People have kids go to college. They have to sell some things every now and again as far as assets go to just live. And it's also not really realistic to me in that I think I was looking, I don't want to say this because somebody might call me out on it, but the median age of a home buyer now is, I think, in their 50s. So you're not paying off that mortgage till you're 100. These are not buy now, pay later programs. These are buy now, pay forever programs. You never get out of debt, ever. And the amount of interest you're paying is tremendous. I'd probably be scared to death to look at the math. These 50-year mortgages, they're not going to help the housing costs. Housing will just go up basically at the same percentage that whatever your monthly payment would go down. And it would be almost immediately. It'd be overnight because you have more buyers coming in. Why just do 50? Why not do 100-year mortgages? Why don't you do 1,000-year mortgages? You can. It's not like you have to put a time limit on it. Yeah, sure. A bank's going to say, wait a minute, somebody's going to die at some point. Are their kids going to take it? Their grandkids? Their great-grandkids? Trump really wants to go inexpensive. Get it down to basically nothing. It'd be like student loans. Pay $20 a month and you get your house forever, but you're going to have to pay for $20 every month for the next 1,000 years. He's talking about the other thing too, the tariff rebates, $2,000 tariff rebate. What do we call this? This is a stimulus check. This is buying a vote. Yeah, we've done these before too. Stimmy checks. We love them. Stimmy checks, $2,000 in our pocket. We are making a lot more money off of tariffs right now than we pretty much ever have. It's only about 200 billion, I think, 300 billion, right around there somewhere. And we spend $7 trillion a year. So we're not making up anything. We're still very much running on deficits of trillions of dollars each year. And even this continuing resolution, it's funding at the same levels. There was no cuts going on. We're not solving our spending problem. So therefore, we will never be able to solve our inflation problem. Interest rates, they're talking, the Fed governors, they're going to roll over next year. Jerome Powell's going to be out as Fed chair. And then Bostic actually said he's going to be done which is the Atlanta Fed governor. He's going to be done in February, I believe. Somebody else, the one that Trump's trying to get fired. I can't remember her name. And he's going to get people in here that all want lower interest rates. The problem with lower interest rates is, I've tried to explain this before. Put those lower interest rates on, but those only control. The only thing that Fed fund rate means is what banks lend to each other overnight. It has nothing to do with what we get. The longer credit lines, like the 30-year mortgages or maybe the 50-year mortgages now, those credit lines are going to be based on what markets do, not what the Fed does. So there's going to become a point where they lower interest rates on the Fed fund rate where banks can lend to each other. But as I said, the banks are not going to turn around and lend that money out at just barely above that. They're going to lend it out at above inflation. So if inflation kicks up, they'll be lending at whatever it is above inflation because the bank is not going to lose money, purchasing power every year. They're also doing their balance sheet runoff. That is over. That was basically tightening, meaning that they were not buying up new treasuries, new mortgage-backed securities. I'll only touch on this briefly because most people here will probably be bored with this sort of thing. They're going to buy treasuries, and whenever they're mortgage-backed securities, which were the things that they bought in 2008 that caused all the problem, as they start to roll off, they're not going to purchase any more mortgage-backed securities. They're going to buy treasuries. Treasury market will get an injection of free money, but the mortgage-backed security market will get yanked down because the Fed is the biggest buyer of all this stuff. They by far, they buy more of this stuff than anybody else. That's not really going to stimulate too much except for government debt. It looks like there's going to be a lot of money flowing into government debt in the near future. And if you're worried about risk assets, maybe getting a little frothy, which they are, then you might want to hide out there because as rates come down on treasuries, the price for them go up. I've always told people, they're like, well, you buy government securities, you're not getting much out of them and this and that. But yeah, if the government falls apart, then guess what? Your money isn't going to be worth anything anyway. All right, the Streeteries face new rules in major U.S. city. Yeah, this is Washington, D.C., actually, which is what this one's about, but there's all kinds of this stuff going on in cities. And I totally agree. Your Streeteries are your little taco stands and everything, but they're also restaurants that move out onto your sidewalks, and then you have to kind of walk into the street to get around them. I don't like those. Don't be getting the roach coaches and stuff like that. That's where the best food is. That's where the stuff is, the little taco stands. And this is obviously is not going to bring down the price of a meal eating out in these cities. They're talking about $250 permit for the year and then $20 a square foot every year as well. Okay, the table, are we going to have a permit? And the chair have a permit? And the salt shaker need a background check? And the tablecloth need insurance? This is insane. So many years you were like advocating that, hey, we need to get back out and get these people back to eating out. And then all of a sudden now, they can't even afford to eat out. I mean, there's a reason a hot dog costs a fortune in Central Park, if you've ever been there in a while. This is not going to bring costs down on things. This is going to stir up more inflation. That's what they got to do anyway, because they get more in taxes, more tax revenue if prices are higher. And we have such a spending problem that we have to let inflation run hot. People be damned. And that's like the houses, the housing market. If you really want housing prices to come down, make it easier for home builders to build a house. Make it cheaper for them to build a house. Take away a lot of the zoning crap, the inspector crap, because it doesn't work anyway. That will bring prices down. Take care of some of the zoning stuff. Make it easy to build. That's how housing affordability comes. I hate to say it, but limit investors in houses. I mean, you got BlackRock, Blackstone, some of the biggest funds in the world, actually the biggest funds in the world, buying up single family houses. That cannot be good for the average Joe to have these major funds buying up all the single family inventory. The prices will go up. There it is. Oh. Yep, we're getting out of here now. I'm going to go work out. I'm going to go work it out. Leave a comment, subscribe, do what you need to do. Thank you so much for all your support. Let's engage a little bit more. Let's talk. Let's get a back and forth going. See you next Sunday.